everybody, I'm Contessa Brewer. We are watching a situation developing overseas where the Chinese stock market has now closed down. Trading plummeted 7% in the first 15 minutes of trading on the day, roughly $600 billion of market value, one tweeter is saying, vaporized in 15 minutes. David Nelson joins me, the chief strategist at Bell Point Asset Management. David, China has had several rough days of stock market trading where they have paused trading during the day, but this is the first time we've seen it shut down on the day.
I think that's correct, and it was triggered by a trading halt. They hit the 7% limit, and of course their markets closed. There have been several of these, and this one is really coming on the backs of the depreciating yuan. The currency plummeted. The offshore yuan plummeted pretty far. It was down 0.38%, but that's a large move in currency moves right now, and that's causing capital flight out of the country. Hence, people want to sell stocks and get their money out of there, and that's been weighing on the market. And even as I speak now, oil is now down 2% on top of a really bad day today to hit our markets. I'm looking at U.S. futures. They're down a little over 1% as I speak right now. So we're probably setting up for a rocky open in the morning.
We know that the trading has shifted to Hong Kong, where Chinese shares can still be sold. But there are some 30 listed Chinese firms reportedly now saying that their big shareholders would not sell on the secondary markets. Why is that important? Why does the pause matter if you're seeing a big sell-off?
I think that's in deference, to the government. The government's trying to control, this slide in their markets, and they're probably talking to pension funds. They're probably talking to, some of the big houses there, and some of the big corporations that could in fact sell shares. Maybe this is being manipulated by the government. I'm not sure why that is. I could see that Hong Kong is down right now, nothing like the local shares. I'm not sure how long they're going to be able to hold that up. Eventually, if people want to sell, they'll find a way to do it.
All right. Let me ask you, the World Bank had warned for 2016 of this perfect storm. How skittish are the American markets right now, and how much do people who have exposure in their 401ks, in their pension funds, in individual pension holdings and stock holdings, how much do they need to be concerned about what's to come?
A sell-off in China right now, that people aren't going to stop going to Starbucks, but it's frightening. When you wake up in the morning and you see these geopolitical events, last night it was, the nuclear test in North Korea. That was very scary. It was thought to be a hydrogen bomb, but that may not prove out to be true. And you see countries like Saudi Arabia breaking off diplomatic relations with its neighbor Iran. You put it all together, and then you see these horrific declines in China. People just get nervous when they see something like that, and they hit the sell button. Some of the economic data that we had just today was actually pretty good. The ADP numbers were pretty good. We're likely to have a decent jobs report. Job openings in this country are decent, and continuing claims are down. We've got our problems here, but it's nothing like what we're seeing overseas. But it's translating to our shores, and people are going to hit the sell button, and that's probably what we'll see in the morning.
And David, you mentioned oil. Oil is now falling to about the $33 range. It translates to very good news for people who have to get in their cars and drive to work, who have long commutes. It translates into very good news for taxi drivers and long-haul truck drivers and the like. It does not translate so well to people who have invested in oil exploration companies in the United States of America and companies like that. What's the future here on that front?
It's actually worse than that, Contessa. There's a dark side to oil as well. We certainly benefit at the pump, and that puts more dollars in our consumer wallet. But about 16% of the jump bomb market right now, low-quality companies in the oil patch. And if you're working in an energy-producing state, this is not good news for you. And a lot of these companies are going to have to lay off workers. We've already seen our first wave of defaults, and it's translating over into the financial sector as well. Brian Moynihan, the CEO of Bank of America, is one of his biggest jobs right now. He's instructed his loan officers to monitor the credit profiles of customers that live in those energy-producing states. So it's kind of a blessing and a curse.
All right, David Nelson, thank you very much for that. And we will continue watching here the fallout around the globe from the Chinese stock markets closing.
Thank you, Contessa.